Hi readers, thank you for visiting CollinSeow.com. This is Collin here. I'm trying to go through a few stocks with you this week. Firstly, we are looking at the STI index. I have plotted the 10, 20 and 40 moving average on a daily chart, and we can see from the 20 and 40 moving average that the price has been dropping and the trend has also been dropping. Okay. Next, we want to zoom in to this price over here. Recently, the price has dropped. This is a big drop from here, and then has started to recover from here. Okay, looking at the 20 and 40 moving average, we can see that the stocks is on a downtrend, and the price has rallied up to the 10 moving average. Why do we use the 10 moving average? It's because this is a big drop. So if it's a powerful downtrend, we may look at the 10 moving average also. The CCI is right now on a overbought position, and what we want to do is, if it managed to drop below this price, we will initiate a short position based on the trending down moving average and the CCI high. Okay. Next, we want to look at biosensor. This is biosensor again on the plotting the 20 and 40 moving average. We can see that the price after this huge drop has started to recover. We can also see from here that the 122 region is a good support turn resistance right now. Okay. We will one may consider to enter a short position for this leg down over here if it rallies up, and with this leg down over here. Okay, again CCI is on a high position. Next is Sembawang Marine. Sembawang Marine, again 20 and 40 moving average sloping down. We can see from here. Okay, the price, the CCI has also rallied to a very high position of more than 100, which gives us a good setup over here. What we want to see from here is that the price over the next few days, if it drops below this level, we may initiate a short over here. This is what we call a swing trade. And next one is Sembawang Corp. This Sembawang Corp, again we see the price after a big drop, and then there's a huge rally over here, forming a recent doji candle. The 2040 MA is also sloping down. The 10 moving average is also here. Okay, so this price has rallied more than some of the other stocks with the 10 moving average crossing 10 moving average. Again, we see the CCI is high. We only will trigger if it drops below this price for a short for this leg down over here. Okay, then the last one is Noble Group, which I already put out on the blog. This is another setup. The price is rallied. The price also has gap up. Okay, recently has gap up. On Friday it gap up over here and then close negative. Okay, over here. So again, we are trying to trade this leg down. Okay, thank you very much everyone for reading the blog. I apologize for not having more time to put up stocks. So short-term traders continue to look on to go short. Okay, as the trend is going down on rallies. That means look at the CCI high and look at the downtrend moving average to wait for shorting position. For long-term investors, I like this idea of long-term investors do dollar cost averaging. We can see that we are over here, that we are over here we can see that we are somewhere here, either in denial fear, desperation, or panic. Okay, definitely at this point of time we are not in optimism, excitement, thrill, or euphoria. Okay, we are on this part. Okay, but the only problem is we do not know where are we in this part. Are we near the bottom, near despondency, depression, or are we near fear and aspiration? But what we know is we are on the way down. So generally, a stock market cycle like that will take about 5 years, 3.5 years up, and about 1.5 years down. We can see from here that the STI has dropped from a high in from high. I look at the weekly chart. Okay, from high here, we have dropped from the high here, 3003. Okay, 3003 to now 2650. Okay, we do not know whether the stocks will continue to drop to lower to 2004 or even 2011, but what we know is we are on the way down. Okay, so what we want to do is to do dollar cost averaging, and the beauty about dollar cost averaging is you can see from here that whenever we do dollar cost averaging, okay, dollar cost averaging, even though we buy at $20, okay, this stock is $100 a month, we buy $20 for one share. Okay, the first time you buy is you get 100 shares. Okay, you get 100 shares. The next time the price drop further, okay, you get more shares. Okay, you get more shares, and as the price drop further and then slowly recover, once it recover back to even from $20, it recover back to $17. Okay, you have already a 18% gain. If you recover back to $19, you have 22%, 29% gain, and then 33% gain. So we can see that if you are a long-term investor, it's a good way to do dollar cost averaging right now, in my opinion. So thank you very much for visiting CollinSeow.com. See you next week. Okay, thank you. Bye bye.